Hey guys, and welcome to today's video. So in today's video I'm going to be sharing for free one of my simple and most treasured strategy that will help you to never walk again. So if that interests you, hit the like button, hit the subscribe button, and let's get right into it. So like I promised, I said it's going to be very simple. And for sort of you that have been following my content for a while right here on this channel, you guys know I talk about the refer to target mentality and approach in the marketplace. So that's the same concept we're going to still be applying with this particular strategy, and you don't need a lot of things. And the beautiful thing about this particular strategy, it is very fractal. You can apply it as a day trader, you can apply it as a swing trader, you can apply it as a short-term trader, you can apply it as a position trader. So it's a very simple strategy, with a very simple approach, using the refer to target mentality and approach to trading. And I can tell you it's going to be a game changer for a lot of you, especially for those of you struggling to find your way in price, a lot of you on the journey to consistency, a lot of you that even want to pass the Forex funding challenge, maybe with my Forex fund or with FTMO. This video is right here is for you. All you need to do is pay us attention, take notes if you can, and keep watching it over again till you really understand and grasp the whole concept of what I'm trying to share here. And this is absolutely free. So moving forward, I'm just going to bring in the period separator. So I'm using the Euro USD on the 4 hour. So I'm not cherry picking, mind you, though this is the benefit of hindsight, but you can go in forward in price and see things for yourself. And also to show you that this is not just the benefit of hindsight, I'm going to be showing you a trade I picked yesterday, because at the time of this recording, this is 29th of November 2022. I'm going to show you a trade I picked on the 28th of November 2022, which is on Monday. So I'm going to show you the same trade using the same approach. That was the same way I took the particular trade. So I'm going to, after explaining to you the whole concept and ideology, I'm going to be showing you that example as the last example. So if you want to see the trade I picked, also stay true to the end of today's video, and I'm sure you're going to find a lot of value in this video. So if you're still watching, hit the like button. If you've not done that, hit the subscribe button, and also share with a friend. So let's continue. So the first thing you want to focus on, you want to first identify for you to be able to apply this particular strategy, is an impulsive price move. You want to identify an impulsive price move. So let's just say going into this new week right here. So you see, I'm not cherry picking a very pleasant price action. You can see that this particular price action is very chubby right here. So I'm still going to use it because this particular style of trading is very fractal. It works almost in every market condition you get. So as long as you know how to apply it, you'll be able to find your way in price. So you want to first identify an impulsive price move. And when I talk about impulsive price move, I'm talking about price moving with momentum in one particular direction. You can see that price actually for a period of time stayed in one direction. So you want to observe price. You want to say move in one particular direction. You get it now. So that will be your impulsive price move. And in this case, this is what I mean right here, from this particular low to this particular high right here. So while you are observing this particular impulsive price move, the next thing you want to be observing while still focusing on why this particular impulsive price move is still printing is you want to understand the particular range that this particular impulsive price move is trading within. Now, for you to identify the range, you're going to go to the left side of the chart to identify that particular range, because price action is looking at previous histories to make future predictions in the marketplace. So we can see that this particular high was taken out even by this particular high. So this is not the range we are trading within. We're already outside this range, so we're going to go back in time, and this is that particular range. So if I'm to zoom out, this is the particular range right here. So this will be that particular range that we're talking about. So this particular swing high right here. So if I draw back in time right here, you can see that price, after taking out this particular high right here, price still expanded for a higher range in the upside. And that's what we have right here. So let me bring that out. Okay, yeah, right here. So you can see price expanded right there. You can see when price tapped into that particular area of liquidity, you can see how price rejected. So here becomes our area of reference. Mind you, they refer to target mentality that I teach. For those of you that don't really understand it, you can watch the other videos on this channel where I talk about the refer to target mentality extensively. And when we talk about the area of reference, or the area of, or the refer point, like I like to call it, we're simply talking about areas of liquidity in terms of order block, fair value gap, a and liquidity void and total soups. So that's actually what we're talking to. We're referring to areas of old liquidities, old highs, old lows, fair value gap, liquidity void, and other blocks. So that's what we're simply referring to. That's our area of reference in price. So we want to watch an impulsive price move within a particular range to one of this area of reference. And in this case of the reference, this is a liquidity run. So this is an old high. This particular line tells us that that's an old high that price actually ran. So this particular area becomes our reference point. We can see it because we can see the way price reacted to that particular area of reference right here. So what we want to do is to drop down to the lower time frame, on which is going to be our hourly chart, and all we're waiting for is a break of structure right there. So right here, this is where our break of structure happens right here. So we draw that out in time right here. So this swing took price to the upside. You can actually use this particular low right here for your break of structure, but let's just use this particular one right here. So price from this swing expand to the upside to this area of reference, which is our refer points, and an old high, which is a liquidity pool. And you can see the way price reacted to the downside, breaking structure right here. So on this particular candle, we can see that price retraced into this particular order block, and from here we had our sell to the downside. So to refine our area of entry, we'll drop down to a much more lower time frame, which is going to be the 15 minutes. So we can see price run, price the break of structure here, and you can see price retraced into here, into this particular fair value gap right here on the 15 minutes. You can see that right here, the fair value gap right here. Let me drag that out. Value. So some of us that understand the fair value gap can enter with that little spike, or you can wait for the close of the candle and you sell right there. So this particular area will be your area of what? Of entry. Let me mark that out in time. Area of entry. Sorry. ROI. Area of entry right there. So where should you exit? You want to look out the high to the next swing low. So this particular swing low will be your area of exits right here. You don't want to go for anything lower, because this particular strategy is a very sensitive one. So you want to be very crucial with your area of exit. So this area of exit is actually also your area of target. Mind you, you're using it to refer to target mentality. So this is your exits right here. Honestly, if you really understand this strategy, you will never walk again. So this is your area of entry right here, and you see the way price drove all the way down to this your area of exit right here. Very clean in price. You didn't have to stress too much about it, and this is only a day worth of price action in the New York session. So you didn't even need to stress yourself for anything. So if you calculate how many pips we covered from this low to this area, this is 687 pips. That is a whole lot of pips in one single day on the Euro USD. So for more examples, let's go back to the 4-hour. And I don't want to go into more examples. I'm still going to use this particular piece of price action to explain further what might be this particular strategy and idea. So I'm going to clear the charts. I'm going to clear the chart right here and bring back the period separator, expanding things inside. So this is that particular chubby price action. Mind you, I'm not cherry picking. I'm using the same price action right here. So that will just tell you how this particular strategy is a good mind and will make you never walk again. So this particular move to the downside is our entry to exit right here. But if you look from the 4-hour perspective, this is actually also an impulsive price move to the downside. Is that not so? Because now looking at it, you can see that also. So why this thing is printing out and why you are trading it, if you have multiple screens, you also want to still be paying attention to this particular move to the downside. Is that not so? And when you are observing the impulsive price move, what are you looking for at the left side? You are looking at for the range that you are trading within. And if you identify those range, is this particular high right here, this particular low right here, and for external ranges, for the larger, higher, much more lower ranges will be this particular low right here. So we can see the way price ran this particular low right here in this particular swing range, and we can see the rejection in price right there. These are the things I do for mentorship, but I'm giving it out here free, so you better treasure this particular strategy. So What we're waiting for on the hourly chart, we're looking for a break of what? A break of structure. So let's this is swing um high that created this run in price. So you want to draw that out in time right here. You want to draw it out in time. So you can see the way price ran through it right here, ran through this high with this particular candle. And you can see the way price came back and retested the particular order block. So for better and more refined entry, we'll drop down to the 15 minutes right here. So we can see that this is the running price. You can see the retest right there on this particular order block. So that can be your entry right there. And where do you look to exit? You want to exit using the hourly time frame liquidity bodies right there. You can aim for this particular area, but most of the times when you have long weeks like this, you want to focus more on the bodies. So you can focus on the bodies right there. You can see the way price drove straight into the body right there. So if you calculate the pips you covered, if you had entered on this particular candle, that's going to give you 370 pips. But let's say you were not confident enough, you waited for this bullish candle and you entered on this bullish candle, that would have given you 308 pips just from this particular area to this particular zone right here. So you see how this particular strategy is a good mine. I've overemphasized, I've said this a lot. So I think I should just stop hyping this particular strategy and let's just get to one more example before I show you the trade I actually took yesterday. So I'm going to clear up the chart again and still using this particular piece of price action. Mind you, you can go into this particular day, sorry, this particular week right here, this other week, as many weeks as possible, and still apply the same context, this same approach, step by step. And I can tell you, you still arrive at the same results in your back testing. And if you also forward test it, maybe in your demo account first, I don't advise you going straight into your um, live account. This is not financial advice. You trade at your own risk on discretion. So if you go forward into your demo account and forward test it, which I'm going to show you how I did it actually like yesterday, and forward test it, you're going to see that this thing will actually play out just the same way I'm explaining it right here. Why? Because this particular strategy is factored in a lot of things, both the market needs, the market inefficiency, the enterprise bank, the enterprise interbank price delivery algorithm, the IPTA are factored in everything. Even time is actually factored into this particular strategy I'm sharing here with you. So this is something very concrete and it's something I only give for mentorship. I'm actually sharing it here out for free. You get it now. So you actually treasure it because it's actually a treasure strategy, as I said earlier. So I'm going to be giving you one more example on this particular week right here that looks chubby. So this was that move to the upside that we capitalized on. But if you look at it, this can also pass for what an impulsive move, because you saw the candle going up, but it's not very impulsive. But we can see if we're like more like a day trader, we want to engage the market, this can pass for being an impulsive move, because we can see price trade with some degree of momentum to the buy side. So what range on the left side are we trading within? Mind you, when you're observing the impulsive move, you want to pay attention to the left side of the chart for the swing range you're trading within. This is the swing range from this high to this particular low, is the swing range you're trading within. So this above these bodies of the candle are the areas of what? Of liquidity. That will be our area of what? Of reference. So they will be our refer points right there. Our area of reference, that will be our refer point right there. So if I drop down to the hourly chart, all I'm waiting for what is a break of structure, and we got the break of structure right here as price traded below the low of this particular candle. Let me draw that up properly in time. So when this particular candle closed there, this validates here as an order block. So if I zoom that in, all we're waiting for is to see price trade back but not taking out this low right here. That tells us that institutional order flow is bearish. So we want to drop down to the 15 minutes to refine our area of entry right there. So price trades breaking structure right there. If you're not yet confident with this, you can wait for this swing low right here to be violated with this particular push down in price. But for me, I'll rather take care because of I'm sure that the impulsive move have ended at this particular area right here. So um wait for price to retrace down, and we can see how price ran above these bodies of this candle, these highs. So this will be an area of entry right here for me. So I enter right here. Why am I looking to exit? Where will be my area of target? Just below this particular lows right here. Just below this particular lows will be my area of exit. So if I draw that out in time, let me mark this part exact low right here. If we look at, if I zoom out in time, you can see how price, if I'd entered on this particular candle right here, this wick candle right there, and I held to this particular area, that will give me 800, that will give me 865 pips. So if I had sold at this particular area and I held it down to this area, that would have given me 865 pips. Just still using the refer to targets mentality approach and applying the impulse price move, observing what the left side of the chart is saying in terms of ranges, and you see how we arrive at three consistent trade in just one particular week. You can go across all other weeks. You understand? You can even come to this particular week. Because of time, I don't want this video to be very lengthy, so I'm going to actually stop right here and just show you the trade I picked yesterday. So just the same approach. So let me clear out the chart so to make things clean. So this is the new week right here. You can see it's a live chart. The price actually moving. So the same approach, impulsive price move to the upside. As this was candle was printing, I was paying attention to the swings, to the swing ranges on what's on the left side of the chart. So if in terms of the swing range, it will be my high right here, and this will be my low right here. So for extension to be this particular high in case price comes to that particular area. So staying on, going down to the hourly chart, what I'm waiting for is a break of structure. So when price ran above this particular high, which is an area of reference, so what I'll be expecting at this area is a break of structure, but that didn't happen. Price expanded for higher prices, which is that higher range we marked out in price, and we saw this rejection in price right here. So after a rejection, we saw price trading lower, giving us what, a break of structure right here. That's a break of structure right there. So at the close of this candle, and what I want to do is I want to be staying on the 15 minutes after that break of structure for what, for entry. So you can see when price traded below that break of structure, this validates here was as an order block on the 15 minutes, and price came back, traded into that particular order block right there. And what happened? That's our area of what, our area of entry right there. That's our area of entry right there. So I just mark that with an E right there, entry. So where am I looking to exit? I can exit below these lows right here. Right here, this could be my area of exit, but I actually exited at 4,000 level, the 4,000 level. And why did I use the 4,000 level? I'm going to explain that in a while. I used the 4,000 level because there's a fair value gap right here, and if you look down in price, there's an order block to the downside, all this down close candle. So I knew here could actually create a resistance in price, so I didn't want to trade into this resistance right here. So I wanted to exit at a very fair valued price. So that's why I actually aimed for the 4,000 level. So I entered at this particular region and I held my trade down to this area. I held my trade down to this particular area, and that gave me 618 pips just in one single day of trading using this particular simple approach. So I hope you found value in today's video. I hope you've seen things for yourself, that this particular strategy is a strategy that will make you never work again. So this is not a cliche or a clickbait just to lure you in to click the video, but it's something that actually works, and you can go into your chart, backtest the same strategy and see things for yourself. You get? So if you find value in today's video, hit the like button, hit the subscribe button, and hopefully share this video to your friends or to anybody struggling to find consistency in the forex market, and see you in the next video.